What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight, I wanted to go over the trade I took today on the NAS. And I know we're on the phone. I know a lot of you guys prefer the bigger charts. But going forward, I'll do my best to gather screenshots on the PC or whatever, and I'll make the videos with those. But for this video, we're going to be on mobile. I know that some of you guys actually trade mobile, so it shouldn't be that big of a deal. But like I said, we're going to look at this trade, break it down, keep it as simple as possible. All right. The NASDAQ, for those of you who don't know, you need to be careful trading the NASDAQ, especially if you're a beginner, because this thing moves, okay? You can get punished really quick. You can also make a lot of money, even using a small lot size, okay? So, looking at the bigger picture, taking into consideration Thursday's price action, you can see in the New York session, we have this peak formation high, peak formation low, all right? That gives us our high and low range going into the next day, okay? Those might be where we get triggered into the market. Those might be where we're targeting for our profit targets. It all depends, right? But we have this high and low range. You can see, obviously, we've put in a peak formation high, followed by a peak formation low, and then we start rising back up. We close, this market begins to consolidate. I love to see this on the indexes, a narrow range through Tokyo and London. All right, if we put the sessions on there, you can see here's Tokyo, here's London. We have this very narrow, consolidated, sideways moving market going into the New York session, all right? That's something I like to see on the indexes. The market likes to coil before big moves, so I'm always on the lookout for these coils, all right? And you can see that this is just how the market moves. We go up, coil sideways, big move up, coil sideways, big move down, coil sideways, big move up. These big moves come out of coils, all right? This is a larger coil that takes place over the course of 2 whole sessions, not just, 2 hours here, whatever. This is 2 whole sessions, basically the entire trading day until the last trading session. We are consolidated in this tight, narrow range. So the bigger the consolidation, typically the more explosive the move is going to be. So I'm always looking for these consolidations. We've went over this in recent videos, right? But this is the pattern we're looking for. Peak formation high, peak formation low, consolidation. Here, this consolidation is really taking place kind of right in between, right in the middle of that high and low range. So we're not necessarily coiling under the high. If that was the case, we would also have to say we're coiling on top of the low, but really we're right here in the middle. So really what made sense to me is that, remember, this is how markets move, right? Markets do this. They make a low, then they make a high, then they make a low, then they make a high, then they make a low, then they make a high, right? We don't just go high, 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 high like that, right? There's sort of a structure to the market, okay? So we had this high, then this low. So I might be looking for that high to be put in place, to be locked in place, right? So maybe if right here we started falling and broke through some of these levels, I might think, okay, maybe that's the high being put in place. And, and we should be moving lower. But as this is, that's not what happened. We just continue to move sideways, right? And you can see where we are coiling is on top of the previous day's closing price, right? So we're not coiling under the high. We're not coiling on top of the low. We're actually coiling on top of closing price. We keep coming down into that closing price or the opening price of the new day, right? And then bouncing off of it. Going into the New York session, we're here, all right? So, narrow range. Now that we have this narrow range, okay, we have our Asia high, London low. That's our high and low range of the current day. When we come to our session, if we turn the sessions on again, you can see where this green box starts is 8 o'clock, okay? Now, the U.S. indexes, of course, open at 9:30 with the New York Stock Exchange open, all right, more around right here, but still, this is the New York open, okay? So when we get to 8 o'clock, close to 9:30, we are back trading into the London lows, back down to closing price. Remember, we're only trying to enter the market from 3 levels: the high of day, the low of day, or the previous day's closing price, all right? And we don't necessarily need to get this to the pip. We don't need to be that precise, all right? You can be safe to wait until like the first 15 minutes trades, and you'll be up past this high right here, and you can still get a good clean entry with no drawdown. You just have to be willing to take your profits, right? But so anyway, remember, we're always asking ourselves, are we working the high? Are we working the low? Well, here's our high and low range. What are we doing as we approach 9:30? We're working the low, right? And this is our consolidation here going into the open for the explosive move. If we go down to a 1 minute time frame and we go right to this New York open, okay, here is, okay, we have our move down and then a consolidation. So here's our consolidation. Let's mark that off. That's a consolidation, okay? Now, if we pay attention and we look close, you can see these are lows, these are highs, and then we get this 9:30 spike up. This is our higher high. Okay, that sort of is giving us an indication of which direction the market may want to go. Okay, we get that higher high on the inside, and then we dump right back down, not necessarily to closing price, but back into the low of the day level. So we're not going all the way back here, but we are in that general area, all right? And we can see the very nice pin bar here. My entry was right at the engulfment of that pin bar. I didn't even wait for the candle to close, but if you want to, you could wait until we break this level, right? If you have your EMA on here, you see this coil into that EMA, and you could get in right here with the 1 bar stop and take that thing up. So yeah, I got in down here. That's not always the case for me. I've had better results perhaps waiting for the first 15 minutes before taking a trade, but the way that this market looks, to me, I'm expecting really nice price movement like that, right? And I was targeting the previous day's high, right? Because we're coming off of this peak formation low right here, coiling on top of closing price, right? And so if we're thinking to ourselves, who's in the money, right? Where's the money? Here's yesterday's New York open. Traders went short here. And if any of them are still in that position, hoping that this consolidation is going to offer a breakdown and we're going to continue to go lower this day, right? Then their stops are going to be at the highs or just beyond the highs somewhere, right? So that's where my target is. Who's in the money? Yeah, sure, we have people that are in the money here, and we may never come back down there. You don't know. Like Stacy always says, we're bullish on these indexes unless we have a very clear signal to sell, right? These are the indexes, right? It's a collection of stocks. Stocks, you know how people say stocks rise. They don't go down, right? These companies do whatever they can do to keep their stock prices going higher and higher and higher. So with these indexes, we're safe, basically being bullish all of the time, okay? You could trade indexes and only look for long trades if that's how you are. I like shorting things, but over time I've gotten better at taking these long trades. But that's the trade that I took today. It was, somewhere around a 1.4 or 1.3 and a half, or something like that. Yeah, 1.3 and a half risk to reward ratio. Very nice trade on the NASDAQ, okay? Very easy type of trade once you know what you're looking for. And if we zoom out and we just look at this entire week, how it has gone, right? We had these big moves from last week, big moves down, close and break out here at the low of the week, and then this market immediately started trading up, okay? So we have a Monday low, a Tuesday high, and Stacy says a lot of the times that Monday or Tuesday, either the high or low from Monday and Tuesday will hold for the rest of the week, right? And in this case, that low of Monday becomes our buying extreme. This is the low of the week. Monday's lows are left untouched for the rest of the week as this market climbs. And you can see when we just follow our general, market patterns, this day goes up. When this day pulls back, trades back, where do we trade back to? Right into these New York lows. People bought this up. They're still in that position. Maybe they're trailing their stop, or their stop loss is right here. So they come down, tap any of these traders out before the market starts to rise again. And where does it go? After it hits these New York lows, where does it go? Right back up here to run through anyone who is short. Okay, and the same thing happens again. We have this day up. Where does this day pull back into? Into the breakout, where that breakout occurred, right here, into this breakout level from the New York session on Wednesday, right? Trades down. We talked about it. Maybe traders shorted this market here or whatever, but that's how it goes. So this little consolidation is working back into this level here before taking off. All right. Now, remember, I was telling you, these narrow range days are great to look at, or to look for, on these indexes, okay? They can clue you in to some big moves. This one, I was confident in it because of the way that this looked. We had this clear high and low range, okay? Very nice consolidated narrow range day going into New York. If you look back on these days with this narrow Tokyo, London session going into New York, we often get these big moves, okay? Very often. That's why I like to look for these days. It's easier for me to look at a day like this and ask myself, are we working the high or working the low? Like if we go in here, you can see, right? Here's our highs, high of the day, and here's our low of the day. Okay. And so as we are approaching the New York Open, we are back up high. One push into the high, two pushes into the high. 9:30 gives us our spike down, breaking the low of the day. That's our lower low on the inside. That's the setup for the pump and dump. We pump up one more time back into the high of the day before engulfing and selling off for the rest of the day. So these days I've learned to recognize these specifically on the indexes for great opportunities, okay? And that happens a fair bit, right? But if you look like at this day here, we have the narrow range through Tokyo and London, and then we get this really shaky, choppy session. You know what I mean? That would have been hard to trade. I bet you traders got chopped up right there on that Thursday. Okay, so not every time is that trade going to happen, but a lot of the times you'll be able to see it clearly like this. Here is a narrow range, Tokyo low, London high. When we are going into the New York session, we are trading back into and through the lows, right? for this massive, explosive move right there on a Monday, okay? And it just is what it is. Here's another example of a narrow range. We have highs, we have lows. We go into this New York session. This one would have been tricky, right? Because now we're coiling sideways at the high of the day. Okay, 9:30 spikes up, spikes down. This is one of those types of days, okay? And you might be better off waiting for 15 minutes after the open till 9:45 to figure out where we're going. Right there at 10 o'clock, we ain't finished with this like 2-bar engulfment of this big bearish candle. You could have got your entry in somewhere around in here and just rode it up. But this is the same type of deal. We trade back into this breakout level. It's a breakout because this is the price action that broke out of the Asia high right here. So this is the price leg that is responsible for that breakout. So we trade back down into that breakout level from London, back into the London peak formation low, this nice W here on the 15-minute, right? And then reject and continue to climb. So that's how I'm identifying a lot of these trades on these indexes, using these narrow range days. They don't always work, but when they do work, they are obvious like this, okay? All of your trades should look the same. That's how I'm trying to trade, okay? This day right here, to me, is very similar because look, it's this narrow range here, and then right here, 8:30, we get this spike up. That's our higher high on the inside, barely dumping down to continue higher, right? So it's the same trade as the trade today, basically, okay? It looks the same. And you should be able to sit down with your notebook and draw your trades out all the time. We're looking for a consolidation, okay? We're not breaking out of this consolidation, and then suddenly we'll have our higher high. We might spike down through the lows. So it's like we pop the top, pop the bottom, okay, and then go higher, right? Or on the flip side, we're looking for the consolidation. Okay, the lower low, something like this. So that's our narrow range, Asia, London, explosive move. After working the high or working the low, going into New York. This can make you a lot of money, okay? Go back and look at your charts, right? But anyway, man, I appreciate y'all being here, spending some time with me. Going forward, we'll try to use, like I said, the bigger charts from the screenshots on the computer so we don't have to look at these candles on the phone. I know it's not the best, but we got to deal with it for this video. I appreciate y'all, man. It was a great trading week for me. Let me know what trades you managed to take, or if you took this same trade on the NASDAQ. I always like to hear that when people get that same trade. And I have the Discord channel. If you're in the Discord channel, I'm sure you can see I'm not like giving out signals or anything like that. It's more like I'm updating you when I'm taking trades, and I'll go over the trades there. And if you want to ask me questions, you can ask me questions in the Discord. It's just so we can communicate a little easier, right? So we don't have to go back and forth in the comment section on YouTube, right? But I appreciate y'all, man. Until next time, I hope you continue to free your mind.